Hey, Floyd.
Says my mic is not working. Can you hear me?
I hear you fine.
Strange. Did your local secondary? Did you guys have to use a passcode to log on?
I didn't.
The link you posted in the Meetup website has the code. So when we click on it, it works. I don't know what to tell you, Rick. They just said they clicked on the link and got on. The link is not active. You have to copy the whole address. The link that I sent out should be fine to click into the meeting. I included the link and a passcode.
If you give me that person's email address, I'll forward the link.
There's 5 or 6 people saying they can't log on. I've got 22 people so far logged on. Floyd, in the Meetup event, the link is not active, but if you copy the address and open it in the browser, it should open you into the meeting. It must be working. We got 28 people now signed in.
Floyd, can you hear me?
Yes?
I put something in the Meetup message thread. It works if you tease apart the URL, go to that, and then separate what you put after PSW and put that raw string in as the passcode. But I put this in the Meetup thread, so everyone should have access to it.
Okay. Okay, but I looked in the chat, a message or a link. I wonder why.
Kim B put in a link that
She said, no, it just popped up from Francisco. I just now see it.
and I put in the password also.
Floyd, I think they meant in the Meetup chat. There's a chat in the Meetup website.
On the Meetup website, because people who can't get in aren't going to see the chat.
Exactly.
It's on the main Meetup webpage.
Okay, good. Thank you.
And that's the one that worked for me. Tim, the one that you put in there is also the one that's in Floyd's email. And that's the one I just got in on also.
It must be working for people. We got 40 people signed in now, 41. So it must be
working because Rick put it on.
Yeah. Or what Kim put in too. They we both put in what'll work.
And the other thing I noticed that I had more than 100 people trying to RSVP, and early this morning someone emailed me and said they were put on a wait list, and about 6 or 8 hours ago I got an email from Zoom saying they would give me the 500 attendee for half price for 4 months, and so I signed up for the one that allows 500 people to come in.
Oh, okay.
So let's go ahead and get started. Out of respect for the people that are here, we've got 45 in, lots of familiar names and faces out there. Monica too, a lot of good folks in, and more probably be signing in as we go. We got an exciting program tonight with Steve's going to be our speaker. Steve, are you with us already? Yeah, he's there. I see Steve is there too. Hi, Steve. How you doing?
I'm doing great.
Nice to meet you. I've heard a lot of your talks before. Really?
I'm glad you made it, Rick.
Does your name show up as something else, Steve?
Just Steve Schwetz.
I see him third on the list.
Let's get going, everybody. I appreciate the good turnout. We've got an exciting topic tonight. On the market, everybody knows, we talk about the Santa Claus rally and how January goes, the whole year goes. It's November, December were so amazing that almost everyone involved in the market said, thank you for November, December. And then the last day or two of December and the first couple of days of January, we're going, wait a minute, this thing's supposed to be going up. And then it decided it's fine, let's keep going up. IBD went from 80 to 100% invested down to 60 to 80% invested. And now they're back up to 80 to 100. So I think what I want to do right now, let's do a poll and get a sense of where people are. Is the poll visible?
I can see it.
Okay,
Yeah.
good. Go ahead, if you don't mind, respond to that. It's always interesting to me that 10 o'clock back on the East Coast, and we end up, I think last month we had 30 people from the East Coast. Okay, guys, the meeting's recorded, so I guess they want to be on live, but no telling how many people listen to the recording too. But that's exciting to see the interest across the country. We've got 91% participants, and we'll give it another 5 seconds or so. We got maybe 3 people from overseas. Let's end the poll. We'll share the results. So we have a 35% East Coast, 33% Pacific time, and then spread out. Now, we have 4 people that say they're somewhere else besides the US and Canada. If you wouldn't mind unmuting yourself and let us know where the 4 people are from.
Hey, Floyd,
Yeah.
the last time I looked, Hawaii was part of the United States.
You sure about that, buddy?
Yeah, I'm pretty sure.
Anybody else? Last month we had someone from China. Anyone else from not in the 50 states or Canada that would like to identify where you're from? I guess not.
Yeah.
Thanks for those of you that did participate. Let's do a quick look at our agenda. I'll share my screen first. Tell me if you can see the agenda, correct?
Yep.
Yeah.
So tonight, we've been doing this well into our 14th year at meetups. We've done 122 of these. We never do June, July, and August because Alaska's crazy in June, July, and August. And I'd like you to look at the disclaimer. I think everyone knows this. I just want to make sure that nothing I say, nothing Steve says, or people say in the question and answer is regarding a specific recommendation on stocks or ETFs you should buy. This is for educational purposes only. Same as if you watch IBD Live, they have their disclaimers. We're doing this really to help people with their investing skills, maybe complement what they've read in Bill O'Neill's books or in IBD Live, so people can learn how to take care of themselves and not blame somebody else. The key message here is, I'm an unpaid volunteer for IBD. Each person needs to take personal responsibility. We just did poll number 1. We're going to look at the big picture briefly, which I recommend you do every day that the market's going. If you read the big picture, you'll get a good sense of what's happening, what happened that day in the market, maybe what caused prices to change. Let's just do a quick look. You can read the entire big picture in less than 5 minutes. Once you get it up, it's here. It looks just like this. Stock market ends narrowly mixed today. There was a little bit of a scary period during part of the day where, for reasons I don't understand, things just started headed south pretty steeply for maybe 30 minutes or an hour. Then they came back and recovered. The stock market finished mixed well off session lows Thursday as Wall Street reacted to a hotter than expected consumer inflation report. And also today is the first day ETFs started trading cryptocurrency. Now investors will shift their attention to tomorrow's producer price index, another inflation report. Early Thursday, Labor Department reported consumer price index rose 0.3%, and the expectation was 0.2. The 12-month CPI rate rose 3.4% from 3.1 in November versus expectations of 3.2. So you can see these things are really sensitive, and there's, I don't know if it's most likely institutions or others that make major decisions based on some of these numbers. It says the core CPI, which strips out volatile food and energy prices, rose 0.3% from November forecast of 2.2, etc. Despite the surprise in price data, the 10-year Treasury yields fell 5 basis points to 3.97, falling below 4. So I'm not going to read this whole thing. I think I recommend you read it every day, but the market pulse is another very important element that's buried within the big picture. You can see right here, we're a confirmed uptrend, and their exposure, which is the highest exposure that IBD shows on their exposure graph, is 80 to 100%. It tells us the number of distribution days, which is medium. It's not a low number of distribution days, and it's not really high. Leaders, Netflix, NVIDIA, DocuSign, Make My Trip, Salesforce, and leaders down in volume. It's surprising to me that Coinbase and others on here that I thought that when they started trading ETFs, this stuff was going to go up, but that shows what I know. So it says major indexes finished next Thursday as they slashed heavy morning losses throughout the rest of the session. On the Dow, Salesforce CRM was the biggest gainer at 2.8%. Shares hit a new high. Boeing tumbled 2.3. Among the Magnificent Seven, NVIDIA rallied to more record highs. Amazon shares climbed 0.9 to a new high. Tesla skidded, and I think I read Tesla's cutting their prices once again. So that's enough on the big picture. Embedded in the big picture every day is a video, and sometimes it's 20 minutes long. Today it's about 8 minutes long. The other thing I wanted to do is give a quick update. I put a quick PowerPoint together. Can you see the PowerPoint?
Yes.
I can see it.
So I'm just going to give you a quick update. This is for educational purposes only. We're going to review our trading strategy using stochastics, what the results would be for the last 4 years. For TQQ, if we started roughly on the last day of 2019 through a couple of days ago, we would have done, using our stochastic strategy, we would have done a total of 22 round-trip trades. This rectangle shows the reason the trades occurred. Like 4 times the fast line was below the slow line, for example. In the last 4 years, this strategy, starting with $10,000, ended up with a total of $72,086. If you just bought TQQ and held it for the full 4 years, your total is shown down here in the bottom right, $23,258. So in round numbers, it's about three times as good. This bottom right rectangle shows the return on an annual basis. For example, 2020, our strategy was up 300% and buy and hold 110. Notice in 22, buy and hold was down almost 80%. Our strategy doesn't avoid losses or drawdowns. It was down 20%. This is a graphical representation of TQQ for those 4 years compared to buy and hold. And wherever you see the line going flat, this blue line, wherever it goes flat, that's when the strategy has us in cash. If we look at the same data for SOXL, same time frame, instead of doing 22 trades, it executed 18 round-trip trades. The total at the end, almost the same, 70,217. Buy and hold ended up with only 15,000. At the end of 2022, buy and hold had about $5,300. The graphical comparison of SOXL versus buy and hold is presented here. We got a buy signal on both TQQ and SOXL on Friday, November 3rd. And that signal is still in place. No sell signals occurred yet when we're using our weekly strategy. So I think that's enough about an update on how that goes. Steve, and get him going. He wanted me to do one more poll. This is Steve Schwetz from Mississippi. So let's see. I think I need to find that second poll. I did share the results. Okay, stop sharing. Poll number 2. The question on poll number 2 is, what is your experience with CanSlim? Can you see the poll question?
Yep.
Some of you might say, what the heck is CanSlim? Or do you have up to your experience, etc.? So we've got about 25% has responded so far. So I'll give it about one more minute just so Steve can get a sense of level of experience out there. So far, Steve, we got 13% of the people saying we don't know what CanSlim is. I've got 75%. I'm going to give it maybe 30 more seconds and we'll end the poll. We got 83%. I think that's good enough. We're going to end the poll and share the results. Can you see the results, Steve?
I can see them.
10% says we don't know what it is. And 44% said they have greater than 10 years of experience.
Pretty good.
We got a cool group of people here. I think I've made you a
Co-host.
Steve, many of you have heard Steve on other presentations. I watched a video the other day and it was excellent from West Point, Mississippi. He says, we don't have meetups in Mississippi. I thought I was going to talk to him for 30 minutes. And after 2 hours, I said, hey, buddy, I got things I haven't even had dinner yet. It was a very delightful conversation. I feel like I have a new friend here. Our topic that I asked Steve to cover for us is, how do we improve our trading in 2024? Take it away, Steve.
First of all, I need to apologize to everybody. I'm still trying to get over a cough. I had COVID last week. I apologize. You might see me trying to hit that mute button every time I feel a cough coming. Here we are talking about what can we do to improve our 2024. I love the start of a new year. Whether I had a good year or a bad year, I feel refreshed. Whatever mistakes I made in 2023, this is a new ball game. I can learn from those mistakes and do much better in 2024. I'll be making mistakes in 2024. I think the reason I love the market so much is because you're never 100% right. There's always going to be a mistake you'll make. And especially with CanSlim, it's more discretionary type of trading method. So there is judgment involved. And you can always go back and say, I can't believe I made that kind of judgment on that particular trade. In hindsight, it doesn't look like such a good idea. But it was funny, I think, 5 out of 50 people said, what if CanSlim? My goodness, when I go back and look at some of my past trades, I'm asking myself that same question. What am I doing? What I was wanting to do, if you really want to be serious about improving your results, there's only one thing you can do, is doing post-analysis. I remember listening to David Ryan back in 2013. He was this amazing trader, and we were asking him questions. He would do is say, guys, everybody's got their own unique personality, their own way of looking at the market. It was great. I love it. It gives us a foundation to start from. Ultimately, you've got to make it your own system. There's things that I'm going to do that you guys are going to say, oh, Steve, who trades like that? Some of the things I do through my post-analysis, I realize that I'm not good at that, so I need to have some rule to help me overcome this weakness of mine. It will be your weakness. It could be a strength for you. I've got to come up with rules to overcome those weaknesses. There's going to be some things I'm good at. That there's a couple things I'm good about taking losses, but not everybody's good at that. And so what I was wanting to share with everybody was years ago, I went to a level 3 workshop in Dallas, Texas. I like the old days where you get to, when the workshops were always in person, you got to meet all these great people. You got to spend face-to-face time with a lot of the IBD instructors. It's too bad that now is Zoom, which is great too. I do miss that face-to-face time. So the level 3 workshop was great. I'm going to share with you guys some of the pages that were in that workbook. Let's see if I can. Yeah, here we go.
And Steve, just before you do that, Floyd here, since 10% roughly said they didn't know what CanSlim was. Let's briefly say that let's review CanSlim for those that don't know
what it is. It's an acronym. Each letter of that word means something. C means, and this is just a way, Bill O'Neill came up with this system, and he was very humble. He spent years going through the top winners of the market, trying to figure out what common characteristics these great winners have. Through all his studying and post-analysis, he came up with CanSlim. The C stands for great current earnings, sales. You're really looking for 25% plus of recent quarterly growth rates in earnings and sales. The C is. A is the annual earnings and sales. So it's nice to the last quarter or two to see 25% of an increase in the growth rate. for earnings and sales, but he wanted to see more than just a couple quarters. He wanted to see companies show the ability over 3 to 5 years, grow their earnings, say 25%, grow their sales over that time period, 25%. He looked at that. Return on equity, he put that in the A category. He liked to see companies with great return on equity. He looked for a minimum 17%, but he really liked to look at 20, 25%. The higher the return on equity, the better. And so that's the C and the A. The N it stands for new. What does this company have? New products, new services, maybe a new management team, maybe a new 52-week high or a new all-time high. These are the things that he was looking for. A young company. I've done a lot of research on stocks that have done well, and a lot of them are young companies that have just been around for maybe 5 to 10 years. Mark Minervini did a study on that. Bill O'Neill, even at one of his master's workshops, he talked about that. And so you want to see a company, something new, something that it could be a new change in the industry group. Something can be the catalyst to cause earnings and sales to increase in the future. S is supply and demand. Supply is actually what the S is. He's looking for there is the definitions changed over time in the old editions. He would like to see stocks with a low amount of float or low amount of shares. His feeling is if you've got a company that's got all these great growth characteristics and there's not that many shares out there to be bought, then it doesn't take that much demand to really drive that price up. Now, as time has gone by and how institutions have gotten more involved and the mutual fund industry has gotten so much bigger than it was back in the 1970s and 80s, it's a good thing to have to get stocks to have lots of liquidity, lots of stocks that trade, lots of average dollar volume a day. Those are the kind of companies that institutions can get into. And that is a segue. Let's go to L next. L is a leader. L means that the stock needs to be a leader in its group and show relative strength. It needs to be able to outperform other stocks in its group and other stocks in the market. One way that Bill O'Neill tracked that is he has a relative strength rating. He would say that the big winners, their average relative strength would be 87. So you're really looking for stock with a relative strength rating in the 90s, 80s would be fine. You're looking for stocks that show that ability to outperform other stocks like I said, in the group, in the market. You'd like to see a strong industry group itself. You want to see a stock that's in an industry group in the top 40. The I stands for institutions. You want to have Fidelities, the Vanguard American funds, but you want these BlackRock. You want to see these funds be able to buy these stocks. We're looking at chart patterns, and we're trying to find, from looking at the volume and the price on the chart, clues that these big boys, the Fidelities of the world, are accumulating a position in a particular stock. And we're like a parasite, actually. We see what the big boys are doing, and we're kind of like getting on board. The stock's got the great earnings, great sales growth, the new product. It's the leader in its group and in the market. It's got liquidity, and then you got this institution that's buying, accumulating shares of this particular stock. We see that on the chart, and we want to get on board. William O'Neill will say, you can have the C, the A, the N, the S, the L, and the I. All these characteristics in your favor. But if you don't have the M, which is market, it's going to be tough to make money. You want to buy these stocks in a good market environment. Floyd just went over the big picture, and I read it every night. It's a nice little synopsis of what's going on in the market that day, or the health of the market. And it's just a good thing to read to give you a good feel for how the market's been trading. But you'll see it in your stocks. When I look at the market, I emphasize what the leaders are doing much more than what the indexes are doing. I watch the indexes. The indexes are important, but I want to see the leaders. If they're acting well, if they're breaking out and showing follow through, we're seeing volume come in as they break out. We see stocks that when they do break out, they don't immediately turn back down and get stopped out for 6, 7, 8% loss. So those are the things I'm looking for, especially the big leaders, the NVIDIAs, the Microsofts, the Amazon, Googles, Facebook, more Meta. I'm looking for those big leaders with the liquidity that I know the institutions have to get involved in. how well are they performing? And if they're performing well, that's telling me I've got a healthy market, especially if the stocks I'm buying are working too. If I've got a strong environment, I should be able to buy stock. And for the most part, they should continue going higher. And if they do pull back, the pullbacks don't last very long, and then the market shoots right back up. So that's pretty much what CanSlim is. I highly recommend reading Bill's book, How to Make Money in Stocks, because he explains it much better than I do. I just gave you the Cliff Notes version, but the book's very good. 24 Essential Lessons is a very good book. The Successful Investor is a very good book. But the textbook's pretty much How to Make Money in Stocks, because it's got all the charts and it tells you pretty much anything you want to know about CanSlim.
Thanks, Steve, for
Sounds
that
good.
summary. Just so everyone knows, we have Jan on the line with us, and he is in the Netherlands where it's 4 a.m. Go ahead, Steve. Take it away.
Let me see if I can share my screen. Like I was saying earlier, when I was at the level 3 workshop in Dallas around 2006. But anyway, there was a segment in that workshop I thought it was so valuable. You always ask, okay, I got to do post analysis, but exactly what are the steps that I've got to go through in order to do this post analysis? They gave us the whole, like, this is how you do post analysis. This is how we teach it. I hope everybody can see this page right here that says post analysis.
Yes, we can.
All right, good deal. First thing you need to do is every time you place a trade, print out a daily and weekly chart, because you want to see on the day, what did the chart look like? What were the fundamentals at that time? You want to know that now, because if you buy the stock and you hold it 3 months, then sell it. The fundamental criteria could be different. The ratings, the IBD ratings will be different. The chart's going to look different. When you first buy stock, print out that daily and weekly chart. The next thing you want to do is, I have a spreadsheet where I keep up with all this information, just the basic information. What day did you buy the stock or sell the stock? Why did you buy it? A lot of times I would print out that daily and weekly chart. I would just handwrite the reasons why I bought the stock. Mike Webster would have a blue pen and a red pen. All the positive characteristics he saw in a stock, he was circled in blue. Any negative characteristics, he would circle those in red. It was a real nice visual look at that chart, because you can see all the blue circles and the red circles. Hopefully you'll see a lot more blue circles than red circles, because if you saw a lot of red circles, why are you buying the stock to begin with? But anyway, these are some of the very important pieces of information that need to be kept up with every time we buy stock. And so you got this trading log. I know it's tedious. You have to put in all this stuff, the reasons why you buy the stock. But over time, it's amazing how much you can improve in your trading by doing this. It seems tedious, but it's so helpful. Once you start organizing your trades, which is step 2, you'll start to see some weaknesses that you have. They'll show themselves to you. You do 1 or 2 trades, and maybe that particular weakness doesn't really come to light. But once you do a post analysis after a year's worth of trading, you'll say, I made that mistake. Same mistake I made on this chart. And it just hits you. I can't believe I keep making this same mistake over and over again. By keeping our charts and records this way, a lot of our weaknesses will show themselves. When I was younger, especially, I thought, weaknesses? I don't have weaknesses. You think that you're really better than you really are. And especially I was 27, 28 years old. I had to be honest with myself. When I started doing this post analysis and looking at my trades, I had to realize that I just wasn't nearly as good of a trader as I thought I was. And then when I started losing so much money, the bank account was showing that I definitely was not a good trader, and I really did not know what I was doing. One thing that I thought was so cool about this slide when I went to this workshop in Dallas are these key questions. And we can go through a few of these because these are really important. And these are questions that I think we can ask ourselves when we are going through our charts and looking at, why did we buy this stock and not this stock? Ask yourself this question. When you bought this stock, was this stock a leader in a leading group? And in hindsight, you come back and think, why did I buy that stock? It wasn't the leader. NVIDIA was the leader. Why am I buying this fourth stock in this group when yet NVIDIA was the number 1 stock in this group? Did I have too much exposure on thin or volatile stocks? This is something that would happen to me a lot. I would try to trade a stock that traded maybe average dollar volume was 10 million shares. And I would try to trade it the same way as a stock that traded 100 million average dollar volume. And I would see that I'm taking too much risk on these stocks that are so volatile. Recent was MARA, extremely volatile stock. I can't trade that stock the same way I would trade a NVIDIA. It's just completely different stocks, different personalities, different characteristics. The way I can learn that I don't need to do that is through my post analysis. I can go through my post analysis and say, you know what? Every time I buy these volatile stocks, I always get shaken out. I lose money overall. This post analysis is going to show you these things. Another great question is, did I evaluate all the CanSlim factors before I bought and sold a stock? This is the time when Mike Webster would buy a stock. All the important things he thought were good about the stock, he would circle in blue. All the bad characteristics, he would circle in red. This is something that David Ryan did, and it's something I used to do too, that I chase beyond a proper buy point. You want to buy as close as you can to that pivot point. So you got a cup and handle, the pivot point's $50, but you want to buy very close to that $50. But once you start buying at 53, 54, even 52, you're starting to get a little bit too extended, opening ourselves up for a normal shakeout that can happen. We end up having to take a loss in a stock that we should have never taken a loss in if we would have bought it properly. Printing out these charts, you're buying a stock, putting a little point on that chart and saying, okay, I bought it right here. Then when you go back and look at it after you sold it and thinking, you know what? I took this loss and I bought it extended. I got greedy. I bought 3 or 4 stocks and they were all working. So you feel, hey, I can cheat a little bit. I don't have to follow the rules exactly. I can lose my discipline a little bit and buy a stock that turns out to be extended. And now you take a needless loss that you never should have taken if we would have just followed our rules. Did I trade in the direction of the general market? I would look at my trades and think, I keep buying these stocks and the general market is falling. The big leaders are falling. Yet somehow I crave the action, feel like I need to buy something. My buddy down the street, he's telling me how much money he made on ABC stock. I feel like I'm being left behind, fear of missing out. I know the market's weak, but I just can't help myself. I just got to make a trade. That kind of thought process will sabotage us and hurt our returns. It's important to be disciplined. That's great that my buddy down the street is making money on ABC company, but look, I am following the CanSlim method and the market's weak right now, so I just need to sit on my hands, not make a trade. Doing nothing is so difficult to do. You think anybody can do nothing, but it's not so easy because there's an opportunity out there every day. The bear market or a bull market somewhere. I think that's dangerous thinking. I think it's much more important to have a set of rules, follow those rules. If your rules say you stay in cash, we stay in cash. This is a big weakness of mine. I would have some good winners, but I was always upset with myself because I did not fully capitalize on the great performance of this particular stock. I missed out on some add-on opportunities. I'd buy stock, it'd break out, but maybe it would rally 20% in 3 weeks. It was showing characteristics of a true market leader. Maybe it'd pull back to the 21-day exponential moving average, give me an opportunity to add to my position, and I wouldn't do it. I'd go back and say, why did I not buy that stock? Of course, it would continue higher and give me another chance to buy the 21-day exponential moving average or maybe the 10-week moving average. But I didn't do it. I would miss out on the opportunity. I would go back and look at the chart and say, there was an opportunity here to add to the position. Why didn't I do it? I really didn't have a good way to add to my position. I had to come up with rules. What setups do I need to use to capitalize on adding to my position? I'll have a 25% position, maybe a 30% position. And one of these true market leaders, it would make all the difference in your portfolio. These are some of the questions we can ask ourselves as we're doing our post analysis to give us things to think about, ways to modify our rules to overcome issues in our own trading. They took a trade, a Harman International Industries. I don't know if you guys remember them. These are the trades they made in this stock. They were marking. I bought 2,000 shares here and I added to my position here and I had to sell some here. And they would mark on their chart all the places where they bought and sold this particular stock. On the next page, there we go, keeping track of all your trades in this trading log. It doesn't have to be that complicated, and you don't write a whole paragraph of why you bought the stock. For this guy, he was tracking the trades and everything. He would document his reasons for making decisions that he made. And he'd have a little short, a couple sentences on the market. So he would know, okay, what was the market doing when I was making these trading decisions? Why was I making these trading decisions? What are my results? Was I doing well? Was I not doing so well? And these are things that I think, like I said before, I know I keep repeating it. I want to be making some trade. I will tell you, in my experience, the times that I would take a leap in my trading, it was because of post analysis. It was taking the time to go through trade after trade and identifying my weaknesses, things that I'm just not good at. I'm not a naturally patient person. I'm not a naturally disciplined person. I have to work at these things. Post analysis is a great way for me. It gives me feedback on my trading, and it truly helps me. There's one thing they didn't talk about, and I do this in my own trading. I've got a column that says comment on my spreadsheet. But what I'll do is, some people are great about buying like cup with handles. Some people can buy cup breakouts. Some people are really good about buying those shakeout plus threes on those double bottoms. You'll have some people that are very good at buying to the 10-week moving average or 21-day exponential moving average. Some are great at buying earnings gaps. When I am buying a stock, I write down what setup is triggering that entry. And then I'll actually look at my results by setup. One thing that really helped me out in 2022 and 2023 was in 2021, I realized that some of my best results were coming out of earnings gap breakouts. My problem was I didn't trade that many of them. The ones I did trade worked out really well, but I thought to myself, why wasn't I doing this more often? I started trading more earnings gaps, and I've got friends who are pretty good about trading these earnings gaps, helping my results because those earnings gaps, I've got a neat way of getting into these things. I use after hours trading. Some of you might have seen the interview with Richard Moglen. Small investors, there's so many opportunities for us to take advantage of after hours trading. If you've got liquid stocks, try a stock that trade several thousand shares every 5-minute bar. Five's done it. Spotify, Microsoft, ServiceNow. There's been a lot of opportunities in the last quarter to take advantage of these earnings gaps. And a lot of these big guys, they're not able to do that because we're so small. We can buy a few hundred shares of a stock in after hours trading. Those guys, they got to buy 100,000 shares. Their hands are tied on what they can do in after hours trading. Ours aren't. We have an amazing advantage. I think it's easier to trade now than it's ever been in my life. I think now is so much easier to apply CanSlim now than ever. And I've been trading it since 1997. And I think these days it's so much easier to apply. These are some things I wanted to share with you. Take whatever ideas you like that I've talked about tonight and make them your own. I just think it's so important to do that post analysis. If you ever want to improve from one year to the next, it's post analysis. I don't think books will do it. It's just a matter of you getting down there, looking at your charts, marking where you bought, where you sold, and printing it out when you buy the stock. Also print it out when you sell the stock so you can see where you bought, where you sold, and write down the rule. What rule triggered your sale at this particular time? Because you're going to find out that maybe those sell rules need to be modified because you sell here, you think, why didn't I hold the stock? The only way you're going to be able to come up with your own rules, sell rules, portfolio management rules is through this post analysis. So that's all I got. I can take questions or we can do whatever you want to do, Floyd. I put everybody to sleep.
I got to unmute myself. We got a couple of questions. Praveen says many after-hour gaps up reverse. Can you talk about your entry process from the gaps?
Yeah, I can. My experience, that's not what happened. Of course, there are some that do. I remember CMG was one, and I remember Sun Solar Edge. And this was a couple years ago. It happened. But it doesn't happen as much as you think. Deckers, this is a stock that I bought in after hours trading. What I'll do in Deckers, it's too bad that these Market Smith charts don't show after hours trading. Here's Deckers right here. a wide range bar that closes way up here, and I want to see volume picking up after an earnings report, then I will start buying. One caveat that when you start seeing these stocks perform well in the after hours trading, rarely do they ever close that gap. They don't do it. I know people gaps always get filled, and I said, no, they don't. When I go into a market, try to identify the pivot point. I will buy as high as 10% above this pivot point. But really what I want to do is buy within 6% of this pivot point. And so when I start seeing this stock move up, close strong, and I'm looking at this usually on 1 minute and 5 minute charts, and I see volume coming in. Volume is so crucial. The close has to be at the high of that range, or so close to being at the high of that range. And that volume has to come in. Those two things have to happen for me to be willing to start buying a stock in after hours trading. Because I want to see those guys come in. I want to see them pushing that stock. I want to see them buying. If you see a wide range bar with a strong close, that's telling us one thing: buyers are in control. And so seeing that, if I can buy it within 10% of where I want to put my stop, then I'm going to start getting in. And if it reverses on me, so be it. If you see this kind of action where you have strong volume and a bar that closes near the top of that range, then it's not going to reverse very much. Once you see that look and you can buy in after hours trading, you've got to use a limit order. You can't just put a buy stop order. That's not going to work in after hours trading. So you got to put a limit order in. But a lot of times what I'll do is, like in Decker's case, even if it shoots up and then it spends a minute or two going sideways, I'll use that as an opportunity to put a limit order there and start buying. Decker's did that as well. But I'm always looking for sharp thrust up on volume. If I see that, I start buying, or if I can't, if it moves just too fast, I'm just not quick enough, then I'll start looking for a pullback in that after hours trading to give me an opportunity where I can still buy that stock and keep my stop within 6 to 10% of where I enter the stock. So those are very important. I'm always controlling risk. I always know where my risk is first. Every trade I go into, I already know where my stop is going to be. Since I know where the stop is going to be, I've got a range. I can buy within 6 to 10%. If it's less than 6%, that's even better. Within 6% of that stop point that I've designated beforehand. Once that stop point has been established, I'll never move that stop down.
Hey, Francisco, why don't you unmute yourself? You submitted a couple of questions in chat. Francisco, why don't you just ask Steve directly?
Oh, Rick, thank you, Floyd and Steve, for your post analysis, Steve. Do you log anything regarding emotions and psychological thinking, or your mindset with trades? Are you thinking?
I'm so glad you brought that up, Francisco. That's a great point. I've got a log where I keep all my trading data, and I comment about why I bought the stock and sold the stock. But I've got another page. It's like a journal market page, and I'll journal some of my emotions. I don't feel emotions every day, but certain days the emotions start creeping in. I journalize those emotions, and it's really important that I do that because, say today, I didn't feel any emotion. Excuse me, I didn't feel any emotions today. What I'll try to do is, if I do feel emotions, let's say this particular day, I do want to journalize those. Because see, 2 months down the road, I won't know what I'm feeling today. But unless I write those down in a journal, I'm not going to know the nervousness I felt. I don't get as emotional as I used to because I get bored. Trading, it's the same rules, the same setup. It's boring. I take losing trades. I've taken 1,000 losing trades. So what do I care about one more losing trade? I want to take 1,000 more losing trades in the future. Okay, I lost money today. So what? I don't care. I'll make money another day. I won't care about that either. Once you get your rules down and follow those, there's not going to be too many emotional days. The times I do feel there's 2 times I feel emotional. When I'm making a lot of money, because then you think, uh-oh, you're euphoric. Everything's working so great for you. Usually when I get that feeling, I'm about to get hammered by the market, crushed. Because I'll look at my equity curve. And your equity curve can go into climax run too. And when it does that, it usually acts just like a stock does. Once it makes that climax run, It just goes straight down. And that's usually when I have my biggest losing days. I'm glad Francisco brought that up. It's very important that if we have emotions, we journalize it. When I started out, I felt emotional every day. But as time went on and you become a little bit more robotic, trading is not as fun. You don't get that emotional roller coaster every day. It becomes a little bit more boring. And you'll notice that your journal entries, you used to write something every day. Now you're writing something maybe a couple times a week, then maybe once a week. And then maybe it gets to where you're writing something that affects your emotions maybe once a month, a couple times a month, because it just becomes so robotic.
This is Floyd. My experience has been when I don't want to write it down is when I should.
Yeah, that's a great point, because I'm totally in your camp there.
William is saying, how many hours of the day do you watch Trade the Market? Are there more specific time periods you are more active? How many hours a day do you look at the screen, Steve?
I'll tell you a funny story about that. When I first went to full-time trading, I was thinking to myself, oh my goodness, I'm going to make so much money now because now I can look at every tick on that chart. I'm going to be day trading, looking at these 5-minute charts. I'm going to be buying here and selling there. And just the opposite happened. I would lose. I built my account up to allow me to start trading full-time. Then it's almost like it reversed. It's like everything that I forgot about, I forgot. And so then I had to start making rules for myself to not look at the market, to stay away from the market, because I was falling into the trap. I was, I'm not doing anything all day long. Might as well make some trades. That's not discipline. That's not following your rule. But I stopped myself quick because I realized what I was doing. And I said, whoa, no, you're going to get back to what you were doing before. I would watch the market in the first 30 minutes to an hour every day, and then the last half hour almost every day. But I've even gotten away from that some because now I use weekly charts to do a lot of my selling. So unless below a pivot point or I'm in a losing position, I'm just up 1 or 2% and the market's turning down or my stock's turning down, that alert will tell me, I need to pop up the screen and see what's going on. Most times when I'm into a stock, as soon as I buy a stock, I immediately put a good till cancel sell stop order. So I don't have to watch it. I know if it doesn't work out, I'm going to lose 6%. Big deal. I'll lose 6% all the time. But it keeps me from staring at the screen, because I know if I stare at the screen, I'm going to do something stupid. And that's how my emotions affect me. You start watching every little wiggle and you think, oh, I just made money here, lost money here. I want to stay away from that. I don't want to look at the screen. I do most of my work at night, depending on how many stocks come across my scan, maybe 30 minutes to an hour. On weekends, Saturday night, my busy night, I'll go from maybe 11. I'll spend 4 to 5 hours going through charts, reading articles about companies I'm interested in, doing that kind of thing. So maybe 4 to 5 hours on a Saturday night. There's not very many Saturday nights that I miss doing that. You get a routine going and you just do it time and time again. I look at it like a treasure hunt. Oh, somewhere out there's going to be some winners, and my job is to find those winners. And that's where I can do that. And then I'll spend some Sunday night just ironing out my plan for the week. I maybe spend another hour and a half, 2 hours on Sunday.
If you do the good planning, then you're not deer in the headlights when the market opens on Monday. You already know what you need to do, or if you need to get rid of a position or see the action on a new stock. One of the guys asked if you could make comments about position sizing.
On my position sizing, I look at my portfolio like 8 slices of pie. My first position is 10% of the portfolio. If I got a $100,000 portfolio, if I see a stock that I'm interested in, I'm going in $10,000. And then what I'll do depends on the subsequent action. I'll either go another 10 or I'll go 5. Usually I go 5. I'll get up to 15% on my position quickly. On the last 5% position, I try to get to 20. Ideally, I'll have 8 positions at 20% apiece. I'll get that 15%. And usually the last 5%, if it's a stock that's broken out and it pulls back to that 21-day exponential moving average. I love buying stocks. My favorite add-on setup is that first pullback to the 21-day exponential moving average. And when I bounce off that 21-day, that's when I'll put in another 5%. so I can get to a 20% position. Now, O'Neill talks about being concentrated, owning a few stocks, but having 15, 20, 25% positions in those few stocks. And it's amazing. Once you catch a winner, as long as we're disciplined enough to take those 6, 7% losses, or even less sometimes. But if we catch one that goes up 20, 25, we might get one that goes up 50, 100%. It makes all the difference to your portfolio. Those results can be really nice.
Hey, could you bring up the graph for Strike? Are you in it, and have you traded it?
I am in it. Yes. All you guys are probably making money on CrowdStrike while all this was going on. I completely missed that whole move. If I have a leader that I've missed, I fumbled the ball, it got away from me. What I'll do is, and I only do this with the obvious big leaders. Look at the liquidity on this kind of stock. This is a $280 stock that trades 3 million shares a day. This is huge liquidity. And it's got incredible earnings growth and sales growth. These are the kind of earnings growth numbers on earnings and sales side that I crave. I love them. And a stock with this kind of liquidity that has that kind of earnings and sales growth, and it's outperforming all the other stocks in its industry group. It's the leader in its group as far as I'm concerned. So here I am. I missed this move right here, but we get that little correction in the market about a week ago. And while that was happening, finally, CrowdStrike pulled back to that 21-day exponential moving average, which is my green line. And when I see that, and I see it tighten up, look how tight those ranges are. I'll even move into a 30-minute chart. And what I'll do is draw a box where the buyers and sellers, for at least on a temporary basis, they're imbalanced. And you can see that from this sideways trading range. When I see a thrust up like we have right here, and then that thrust being able to hold and tighten up, that's the entry right there. By buying it right there, putting my stop below the low of this box area, I'm not risking very much. I'm risking maybe 5%, 6% on this trade. It's moved up enough now where I'll move my stop to about break even. If it turns all the way back down, I'll get stopped out at break even. But if it continues higher, and it should, if it's a leader, it should continue higher. And it's a stock that I think it's a great stock to own right now. And not every stock works out great. I was talking about this last night at Pasadena.
Hey, Steve, so can you go back to CrowdStrike and comment on how standard it is from the 50-day and the 200? Is it a concern?
No, it's not. If it's a leader, as long as it finds support at the 21-day, from here, that's not bad for me. For me, that's not a problem. It'd have to be like 100% extended before I would start worrying about it. So it's not so bad for me. Now,
Why aren't you moving your stop up?
oh, it's break even right now. Originally right there, and now it's right there. Give it a chance. I don't want to choke the trade. I'm one of those people, I can take a lot of round trip trades. It's psychologically, it doesn't bother me. Now, I got friends who do not like when you guys say, I'm up 15%, and you're telling me you're going to let that stock go all the way back down to your purchase price. They think that's the craziest thing ever. That's their personality. They've got to design rules that fit their personality. For me, I round trip stocks a lot, and it doesn't bother me because I'm willing to round trip stocks. On the other side of the equation, there's going to be some stocks that really work out. I want to be in those stocks, get taken out, and then the stock's back up, moving up, and I'm trying to figure out a way to get back in. I don't want to get into that situation. I would rather just hold the stock, and if it works, great. If it doesn't work, that's okay too. Hey, in this position, the worst I'm going to do is break even. Psychologically, being in a no-risk trade, I love those trades because it can only be good for me. If it works out, I can make 20, 30, 40% on a stock and do really well.
What's your time frame? You're not a swing trader?
No, I'm not a swing trader. I'm a position trader. I like to look at weekly. I'll use a 30-minute chart and a daily chart to get into a stock. But once the stock's working, I don't look at daily charts anymore. I just weekly charts. If it's a trade that I'm up 15, 20, 25% on, I look at it on a Friday and make a decision based on the weekly charts. Do I need to sell a little bit or keep it? I'm looking at weekly charts, and I'm only making those decisions on Friday. I don't care what the market does. I'll give you a great example. There was one really rough day in the NASDAQ. I had owned 12 stocks that day. All 12 were down. You would think, nope, all 12 were down. And you're thinking, my gosh, This guy makes a living trading stocks, and he can't pick one winner out of 12, but I didn't care. It's just one day, and I don't care what happens on the daily chart. I was up on all those stocks, but that particular day, they all went down. But that's another reason why I don't look at the market that much during the day. I knew they were down. I didn't look at how much dollar value I was down. I don't want to look at that. I knew there were no sell rules that triggered. None of the stocks I owned.
A strange thing about that day, I don't know why the traders were doing it, but it was an unusually large volume. It was over 1 million contracts expiring that day on this high. Someone was liquidating their positions as fast as they could, forcing the market to clear positions on other stocks because 1 million contracts represents 100 million shares of SPY. SPY represents the 500 largest stocks. There was a deal where the tail was definitely wagging the dog because the next day everything was fine.
That's why I don't get into the day-to-day action that much. I tell you what, by doing it that way, at least for me, it takes stress away because I know what my worst case scenario is. I've always got a good till cancel stop order in all my stocks. So if things don't work out right, I'm already prepared that, okay, I'm going to lose. I'm okay with that. I've already mentally run that scenario through my mind. So when it does happen, it doesn't affect me. There's a lot of other scenarios that can work in your favor. I know with Twitter, it's so easy now to click a mouse button and see what your stocks are doing, but I'm doing the opposite. I'm looking at it left. I don't do what everybody else does.
Hey, George, why don't you unmute yourself? Because I think you had a question, George, for Steve.
What is your best source in the paper where you've gotten the best winners?
Actually, one of the pretty cool things that I like in the paper is, let me just pull it up real quick. I think I've got my Investors Business Daily up here. It's on the IBD General Market Charts page. You guys can see that. This little area right here, IPO best price change. I get some pretty good ideas in this section. I run this screen every day. Stocks up on volume. The basic criteria are the stock has to be up 3%, sometimes 5%. The volume has to be up at least 50% above average. And it's got to be liquid. It's got to be like 30 million average dollar volume. Simple screen, but I run that every day. And that one also gives me some great ideas of things to go for. But I really do like the section right here. And you'll find there's Uber in there. For me, I find some great ideas in that section.
And thank you. You say you're a position trader. So what is your average hold for a stock? Are you 3 to 6 months or a year? Or?
If a stock doesn't work out, I could be out in the same day or two. But if it's a stock that's working for me, a lot of it depends on the market. I try to hold the stocks at least 8 weeks, 2 to 3 months. But if we're in a bull market and the stock's doing really well, I'll try to hold it 6, 9 months. A lot of times, I'm not that great of a stock picker, to be honest with you. So I don't usually get a stock that I can hold for more than a year. Try to hold them at least 8 weeks. If I've got a real leader, I try to hold that one between 6 to 9 months.
And you never get more concentrated where you portfolios 3 or 4?
I want to do 6 to 8, my sweet spot, 6 to 8 positions. With the 12, I was buying 10% here, 10% there. Everything was working out so good. I was like a kid in the candy store. And, oh, yeah, that one looks good. Let me try that. And I'm just throwing money out there to see if I can catch some true market leaders. Because I never know ahead of time which ones are going to be the true market leaders. All the ones I buy, I think, are going to be true market leaders, but it never works out that way for me. What happened to me there was I had too many stocks. I sold Microsoft because I had a SYM. I got rid of that one. And I was reducing my positions like a Monday. And I was doing things like that to get me back, at least trying to get me closer to those 6 to 8. I've got 10 right now, so I'm still not where I want to be. I'm trying to use the weakness in the market to help me figure out, okay, this stock that I own is not doing so well, so I need to get rid of this one. But I can take that money and buy Spotify pulled back to its 20-day moving average, and it offered me a chance to buy a 5% position, but at the same time, like a Microsoft, I was just following the rules. I actually sold that stock after this break. It seemed to spend so many days struggling to recover when it had lost, and the relative strength line looked pretty bad. And here I am. I've got too many stocks and I got to figure out which are my laggards, which are my leaders. I thought this was one of my laggards. I was only up 9%. The first time I bought it here and I'm having to sell here, it took a loss. Then I bought it again here, held it. But when it started struggling to rally, I sold this position. I think maybe I made a 9% gain. It wasn't that big. Here you've got the market making new highs, but the stock's not making new highs. And the relative strength line showed that to us. So it was telling me that, okay, I got to reduce the number of stocks I own. This needs to be on the chopping block. So I got rid of it. SYM was another one I got rid of and didn't make very much money on that either. But I said, okay, those are not acting well. I need to get into a CrowdStrike that's showing TML characteristics. I've got Deckers, Abercrombie and Fitch, ServiceNow, and Spotify. Some of those stocks are acting well. I need to put more money in those stocks. And that's what I'm doing, weeding, feeding, and trying to get more of my money into stocks that are performing better for me and pulling money out of the stocks that just I was struggling to make any money with.
Thanks,
Right.
Steve. Anybody else have questions that haven't spoken yet for Steve?
Just a really quick one, Steve. This is Ashish here.
How you doing, Shish?
So any of those events like CPI today or PPI tomorrow, do you adjust any of the risk or just let it continue since you already have a stop loss defined at the time? And
Floyd brought up the CPI. I hadn't got a chance to read the big picture yet. I forgot that it was even going on today. Even if Floyd wouldn't have told me after we got done with this, I would have picked up the big picture and read it. There's no rule that says do ABC based on the CPI report. My rules are very simple. I got 5 sell rules. And the beauty of having such a small amount of rules is I can't mess myself up too bad. By having so few rules to make selling decisions, I can't mess myself up too badly. When I'm looking at weekly charts, I can't mess up on Monday, Tuesday, Wednesday, Thursday. I can mess up on Friday, but at least the other 4 days, I'm trading like a champ.
One of the guys is commenting and says, are we aware of what David Ryan calls ants? It's a way used to determine superior
Yes.
strength of a stock.
I love ants. And yeah, I know about ants. I love it. But I will tell you this. Let's throw up a chart. Deckers is pretty good. To me, what makes stocks like, I tell you what, CrowdStrike's even a better example. Showing this ability to go up week after week. Oh, there's one I can't, hold on just for a second. There's one, it might be, I don't think it's CrowdStrike. Yeah. Look at this strength right here. I see a lot of stuff that can be seen on a daily chart. I can see it on a weekly chart. You got some pretty good volume here, about average volume, but you can just see week after week, it's closing near the high of that range. And it's such strong volume. And you can see the turnaround of earnings growth right there. I didn't start buying it until here. And I bought some more here. Seeing this strength, especially in light of how there's a market doing this. And Abercrombie Fitch just keeps on going higher. Look, I'll just in a weekly chart.
Is it amazing to you that you see the revision is 2,300?
It's amazing.
What's going on with that company?
There is a documentary on Netflix about Abercrombie and Fitch and how, they don't want to sell, they only want to sell their clothes to cool, good-looking young people. And only want cool, good-looking people to be at the front counter or customer service. All those people who are stocking the shelves, hey, we'll put the ugly people back there. Really, you ought to see this documentary. It's something else. And they weren't bashful about it. There was one girl they interviewed. They wouldn't give me any hours to work in the front counter. One dude says, she just wasn't one of our best looking girls. That's a nice way to run a company. They changed their culture where, hey, we just want to get more sales going. We don't care what you look like, how young you are. They have changed their way of doing business. And you can see in the earnings growth, just incredible earnings growth. Documentary I watched on Netflix. It's pretty interesting. But yeah,
The guy with Lululemon, he got in trouble 2 or 3 years ago. He said Lululemon isn't for fat girls.
it's a bad mistake. I don't want to sell to everybody. If you want to buy my product, come on in. You got some of these people like that. It creates a turnaround situation. Lululemon stock for a while has been struggling. Now it's starting to get going again. But Abercrombie and Fitch,
From Domino's several years ago, he went and bought a pizza and he said, I thought I was eating cardboard. He says, we got to change how he makes pizza, and it turned around the whole company.
that's right. Yeah, absolutely.
So anyone else have a question for Steve out there? Just unmute yourself and ask away, but be respectful.
Yeah, Francisco again here. For 2024, what are you doing differently? What are you doing more of? What are you doing less of?
I'm going to keep focusing on earnings gaps. Those have been really good for me. I want to spend more time studying. I was talking about Deckers earlier, what to look for in after hours earnings gap. I would ask everybody to do this. I know Swim has it, Trade Station has it, where you can look at the after hours trading of stocks. And what I would do is just the last quarters, the stocks that made those big gaps and ran, pull out those charts, look at those 5-minute charts, and what common characteristics did those stocks have before they made that big run? There's a lot of gold in those charts. If you look at those after hours charts of those stocks that have broke out and continue to go, look at those common characteristics. Print out 30 of them, and you'll start training your eye in what to look for. And you'll see some stuff that maybe I didn't notice, but you'll find it in your observations. But that's one thing that I'm definitely in 2024. I really want to focus on these earnings gaps because I do think I've seen it in my post analysis and my results and things that there's some good money that can be made on those earnings gaps.
Hey, Steve, it's Floyd here. Help me out. I haven't traded after hours. Do I have this correct that you only can trade a limit order? It has to be a limit order. Does it have to be in 100-share increments or can it be any amount?
Any amount.
One characteristic I've been noticing recently is there are many stocks moving because they have high short interest. So how you consider that in your analysis?
I probably should, but I don't. This is what's great about these meetups. You come up with great ideas. Floyd comes up with great ideas. And what it does for me is, you know what? Maybe I need to spend more time on looking at short interest. I don't, but maybe I should. I went to the IBD Market School workshop years ago, I think 2014, Orlando. And when I first went to the workshop, I was getting all excited. I thought, wow, this is great. They're going to give me these rules and give me an idea of how much market exposure. Because I never really felt like I had a good handle on exactly how much market exposure I need to have. And I thought this school would be a great way to help me figure that out. But as I got into it, its rules were very complicated and turned me off. Now, I got friends who use Market School and they love it. It just seemed too complicated for me. But one thing I will say about that, it did give me ideas. I love the idea of just using the NASDAQ. Why not just focus on one particular index? So I said, okay, I like that idea. And so what I ended up doing was I tried to come up with my own way. Because I love the follow-through day idea. I've seen it work. But I was trading during 2000, 2001, 2002. And a lot of follow-through days failed. They failed a lot. I thought maybe if I can modify the rules just a little, I won't get as many false signals. I won't get torn down. I'll try this follow-through day, then I'll lose money. Then I'll try another follow-through day, and I'll lose money again. And that beats you down psychologically. You'll start losing some psychological capital. And so I thought maybe if I can do some small modifications, more than just following a follow-through day, and add this MMTS signal. I learned it from a guy named Brian March, who's from the Naperville IBD group. That's his idea. And then this whole deal about using the tween A low to help me figure out when a window of opportunity is going to end. And that was my idea. But and the reason I came up with that idea was I started in 1973 and I went bar by bar through the whole history of the NASDAQ. I was just trying different things. If I run into a dead end, I thought that idea was going to work and it didn't work. And finally, spending so much time in the research, I came up with some rules that helped me read the market. And it's my way of letting me know when there's a healthy market environment or not. And I update this every day. I got friends who gave me some of these formulas. And at the end of the day, I'll update it. And it's not anything magical either. It's going to give you false signals too, but it will give you less false signals than just following the follow-through day. It is not nearly as complicated as the market school rules. So it's a way of not being so complicated, but still showing a little bit more success than just following the follow-through day alone. There you go. It's free to everybody.
Maybe 10 years ago, I went to Las Vegas and went to that market school program. And when it was over, buddy, I had a headache. And the book they gave us weighed 10 pounds.
It was a good thing that I drove my car because I don't think I could have fit that book on an airplane.
Okay, we're getting close to wrap up time. Who else has a question?
Steve, I have a question. This is Shari from Houston. I want to say, one, you're a great inspiration to me. I follow a lot of things that you do. This will is one of them. Surprised to learn that you just follow the market on a weekend or on a Friday type basis. And I always had the impression that you were really at it the whole time, behind the screen. So what do you do? I'd like to model myself after what you do. I spend a lot of time behind the screen.
I play a lot of tennis. I love tennis. I'm a big documentary type guy. I love watching a lot of that stuff. And but also I do research. I will. I'll Francisco brought up a short interest, and I never really look at it that much. But maybe I'll spend some time looking at the short interest on stocks. And I might add that to the characteristics I look at when I'm trying to figure out what stocks to buy. So, oh, that one's got some pretty high short interest. Maybe I need to move that one up to the top of the ladder. Now I look every morning from market here opens at 8:30. So I'd say I wake up at 8 o'clock to maybe 9:30. I'm watching the market, especially if I've got stocks that I want to buy. Like right now, it's not as important for me to buy stocks because I've already got too many. So I've got 10 stocks. I'm not as focused in the morning because I've already got my positions. I'm not looking to more. And when I am buying stuff, I've got 2 or 3 stocks on my buy list to look at. When I'm buying, I'm looking at the market. And I will tell you, with earnings season is getting ready to kick off for the fourth quarter, earnings are really going to start coming out next week. I'm going to be very busy looking at what stocks are coming out with earnings. I won't be as busy as most quarters because I've already got 10 stocks. If I own 2 or 3 stocks and I'm looking to fill my portfolio, I'll be going through those every night. I'll see what companies are coming out with earnings the next day. And I will spend that night preparing like, okay, where can my stop be? Where can my entry be? How many shares can I buy? Stuff at night before the next morning. When the market is going on, besides the first hour, maybe the last half hour of the day, I'm not doing very much. I've already planned what I need to do the night before. When the market's actually open, my plan has already been set up. I don't have to watch every little tick during the day. Now I'll have some alerts. If I've got a couple stocks that are moving into a buy point, I'll have an alert and say, okay, Steve, get that chart up. You got a stock here that's close to your entry point. Be ready. But that's not happening all the time. Plus, because I'm a position trader and I'm trying to hold stocks for weeks, I'm not making that many trades every day. In fact, a lot of days I don't do anything.
Steve, what is your buying criteria?
Buying criteria is, I'll tell you what, I'll show you. I'll give you. I don't own this stock. When I'm buying, I want a stock with great earnings growth, great sales growth. Base is a good example where you're thinking this thing loses money. This doesn't have CanSlim characteristics, but it's a new company, and going forward, it's making money and supposedly making. That's a 256% growth rate. That's incredible growth rate. I'd like to focus on companies that have triple-digit earnings growth, triple-digit sales growth. Those are the ones I really like to focus on, especially if they're liquid and they're the leader in their group. If they've got that characteristic, they're already up near the high of my buy list. And so I'll think about that. And then as far as buying stocks, what I like to do is I'm looking for trading ranges, boxes, bases, call them anything you want. And when a trading range develops, and I like to, just like you read in the book, a cup with handle, a base, I like to see a flat base is about 5 weeks. I like to see a cup with handles, 7 weeks. Double bottoms are about 7 weeks or more. I like to see longer bases. The longer, the better. What I'll try to do is find the base. And the first opportunity for me to buy stock is a shakeout of that base. If I can find a shakeout, then I can start building that position, put in my first 10% position. After the shakeout, it rallies. Now, if it's going to work, it's going to rally to pretty close to the top of the range and then pull back and tighten up. If I see that, then as it breaks out, I want to buy. Another thing that can happen is instead of rallying and tightening up, one thing that it can do is it can just have an earnings gap. That's what Decker's did. Decker's, I could draw a sloping trend line right across here, and it just broke out an earnings gap. So that's another way for me to get in. If it just has an earnings gap, I'll go with that. And the fourth chance for me to get into a stock is after it's broken out, and then you get that pullback to the 21-day moving average. That's your next chance to buy the stock. Now that's the sequence I'm always looking for. Those four, you don't always get a shakeout. You don't always get an earnings gap, but I'm always looking for those four things when I'm looking to buy stock. It's either going to be a shakeout of a base, it's either going to be an earnings gap on the right-hand side of the base, or one of these stocks that rallies up the right-hand side of the base and then pulls back like a VCP. It rallies, pulls back, tightens up, the volume dries up, and then as it comes out of that like a handle, then I'll get on. But yeah, that's what I try to do. If all that happens, the last chance for me to get into a stock is it breaks out, but then it pulls back maybe to a 21-day exponential moving average or to the pivot point that it just broke out from. That's my last opportunity to be able to buy that stock. Hopefully, I won't get all four chances, but maybe I'll get a couple. If I can put in a 10 and a 5 or a 10 and a 10, I'm already up to 15, 20% on that position. And then I can always use a pullback to the 21-day exponential moving average to build my position higher, more.
Steve, in that, after the shakeout, when you say there is a rally and then a pullback, many of us look for the 5-day handle that sometimes doesn't happen, sometimes it's quicker. How you assess that? How many bars to look for, or be comfortable with the pullback and going in?
I'll go 3 bars. If it's a VCP, let's see if I can find a good example.
Living Iron Holdings.
That's a good one, Francisco. You get a kind of a cup. It's still too erratic, but you rally and get one more little cup here, and it breaks out. There's 2 days within one pullback, a second pullback, a third pullback. The more pullbacks that I see happen, the less restrictive I am as far as how many days. I don't have to have 5 days right here because I've already seen a pullback here, and a pullback here. So I can accept 2 days. I'm just looking for some kind of symmetry. If this would have been a pullback here, and then it rallies here, and then it maybe goes sideways for a couple of days, it wouldn't have been good enough for me because there's not enough pullbacks for it to compress, tighten up, have that nice symmetry in that VCP pattern. But the more times I see, the more pullbacks I see, then the less I need to see as far as that last VCP, that last pullback. It doesn't have to have 5 days. It can be 2 days.
What are your top 5 stocks right now?
Let's see. I've got Abercrombie and Fitch, Spotify. I've got Elastic. I've got CrowdStrike. I've got ServiceNow. I've got Path, which I'm actually upset with Path because I really thought it was going to be a great winner for me. It's struggling right now. I end up buying some here and some up here. The position I bought right there, I end up having to sell it right there for about break even. I think I lost 1%. I still have the position I got right here, but I've got my stop somewhere about right there. So it's getting close to stopping me out. I buy stock, it breaks out, it looks good, and then pulls back. I'm not going to make any money on this stock, but I haven't given up on it. I've tried it right here, and it didn't work out. You know, a pullback to that 50-day or 10-week moving average. And if I do get shaken out and it tightens up, I'll take another shot at it because the earnings growth is so strong and the sales growth is accelerating. And now we're getting close to that 25% growth rate in sales. It's a young company that's making money already. I love companies that each year show increasing annual earnings per share. This annual earnings per share is negative, but it's better than that number. If I can see 4 or 5 years in a row where that's happening, that doesn't happen very often. So when I see that and see a company that can grow earnings at that kind of rate and show sales growth at that kind of rate, and I like them being in robotics. I like the new that's associated with this company. It's a young company, and I love the volume as it came out. That's the largest volume week that it's had, even more than its IPO week. That tells me institutions want this stock. Now, it's not working out so good for me right now, but I'm still watching this. Maybe today was the low, and maybe it will go high. If it gets above this box right here, I will buy. The shares that I sold here at break even, I'll just buy those shares right back. And I'll stop below for the shares I bought back here within 6%. And if it doesn't work out, I'll break even if it comes up back here. So I'll lose 3% on the whole position. My winning percentage in 2023 was 38%. So you're talking to some guy who's very good about picking losers. I am that's not, believe me, but I will tell you, CanSlim's so powerful that even when I'm picking those losers, and I see 62% losers, as long as I'm keeping those stops there, those losses small, 6%, 5%. A lot of times I'll see there's trouble coming. I might take a 3% loss. But every once in a while, you'll get an Abercrombie and Fitch. You'll get a Deckers. You'll get an Elastic. You'll get some of these stocks that perform really well. And they'll make you so much money on the plus side. On those positions, you might catch a pullback to the 21-day exponential moving average, give you a chance to add to that position. So now you got a stock that's working well for you, and you've got more money into that stock. So you're helping your portfolio do really well. And that's really all CanSlim is. It's finding those kinds of stocks and then position sizing correctly and keeping your losses small. That's CanSlim in a nutshell.
Steve, this is Floyd. We're going to have one last question and then have you do a quick wrap up. Rick, I'll give you the last question.
Thank you. Steve, going back to your window of opportunity spreadsheet, is there any sort of guide to it so I can understand everything a little bit more? But my immediate question, what is the NASDAQ MMTS that is in red there?
Yeah. And the reason it's in red is because what drives that is the 10-day moving average right here. Notice that it's sloping down. As each day unfolds, the value of that 10-day moving average is less and less, which is telling you the line's sloping down. Now, it's getting close because we're rallying. Maybe we rally tomorrow. The NASDAQ's already closing over 1% above this 21-day exponential moving average. We just need to see this 10-day moving average start to slope back up. Once it does that, then this will turn green. It just hasn't happened yet.
What does MTS stand for?
March Market Timing System. That guy, Brian Mark, that's his name. But it's the March Market Timing System. All you have to look at is this last column. If the woo is on, then it's time to buy. When the woo is off, then it's time to get out of the cash on the sidelines. The crux of the spreadsheet.
Gotcha.
There's been a few other questions, Steve, but in respect for your time, because I think it's 11 o'clock where you are, right? 11 o'clock. So why don't you just do a quick wrap up? I apologize that we didn't get to all of the questions, but go ahead, Steve, wrap it up for us.
I'll tell you what, if you do the post analysis, you're going to improve. The post analysis is going to show you where your strengths are, where your weaknesses are, and it's going to lead you to what rules you need to come up with to overcome whatever weaknesses you found out that you had when you were doing the post analysis, but also have rules that's going to accentuate the strengths that you've got too. You're going to find out that there's certain things that you're really good at. And you think, wow, I'm really good at this. I need to participate in this more. For me, when I was doing my post analysis, I'm pretty good at buying these earnings gaps. So maybe I need to do more of that because my post analysis is showing me that this is something that I'm pretty good at. I've got friends who can just put mental stops. The stock gets close to their stop point and they can just mentally say, okay, I need to sell the stock. I'm one of these guys that would come up with excuses. Oh, it's down 7%. Oh, I'll give it another day. Well, surely it'll come back the next day. Of course, it goes down again. And I play these mind games with me. For 3 or 4 days, the stock keeps falling further and further. I'm wasting all my time looking at this stock that I'm losing money on. And I'm missing out on other opportunities. I just got so tired of that. And through my post analysis, I says, you know what? I'm putting in a good till cancel order. If I get stopped out on the low penny of the day, so be it. I don't care. I am not going to put myself through that mental anguish of watching my stock go down day after day and me coming up with excuses like, hey, this has got to be the last day. I'm fed up with that. The only way I came up with this stuff was through post analysis. And I think it's something we can all do. It'll help us all improve. Everyone here has the amazing ability to do well at CanSlim. It's made for us, just average guy on the street. They can't compete against us in CanSlim. Oh, yeah, they can do other things, but they now in CanSlim. They can't beat us. We're too good.
Thank you so much, Steve. It's been a real pleasure. The goal is not to become Steve. The goal is not to become Floyd. The goal is to learn from various ones of us, but become the best you. What works for you and your personality, your financial situation, only you can figure that out. It may take years to figure that out. So the only final comment, Steve, is I don't know if you want to share your email. A couple of people have asked if they could have your email, but that's a personal decision for you.
Yeah, I can in the chat. I can type it in.
Okay.
It's in the chat right now.
Just be respectful, please. Sometimes I've gotten so inundated with emails. Give some good thought to what your question is and keep it professional. This is great. I had only asked Steve fairly recently. I had listened to, I think on YouTube, and I said, hey, would you talk to us? Bless Steve. He got back to me in less than 24 hours. He said, sure, I'd love to talk to your group. And I thought, wow, what a guy. Thanks a lot, everybody. My favorite saying is everybody's happy trading, and God's blessings to all of you. As we work on this thing together, we're all in these meetups and these IBD things, supporting each other. I learn a lot from these kind of presentations. So we're going to sign off. Happy trading, and hopefully tomorrow's a good day for all of you. Okay. Goodbye.
Have a good night, everybody.
This is recorded. I will send the link to the recording out no later than Saturday.